welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, and Managing Director of International Content, Emily Parker. Good morning, you two.
Good morning. How you feeling?
I'm doing well, thank you. I have my CoinDesk flowers with me. Thank you. Thank you for sending me those. Very sweet. I feel very loved, and I appreciate all of you for your constant support and kind words. Thank you so much.
Well, good. We wish you all the best recovering.
Thank you. Yeah, well, let's get started. I'm just glad we got through this week taking a look at Bitcoin right now. Bitcoin right now, the BTX trading at $48,147. Bitcoin is slightly down today, about 3% over the past 24 hours. And the ETX Ether price also right now trading at $14.95. Ether is down almost 5% over the past 24 hours, according to Trade Block data, the most reliable reference price for institutions since 2014, with billions in assets under management benchmarked against it. All right, so Lawrence, the markets did not like Fed Chair Jerome Powell's comments to the Wall Street Journal yesterday, certainly, didn't they?
No, it did not. And then this morning we had another hit because of the jobs report came in far better than expected. The market was looking for about 210,000. Instead, we got 379,000 jobs created in February. So why there was a sudden drop in the morning and yesterday? The market is worried that the Fed isn't going to raise rates fast enough to tame inflation when the economy picks up again. So Fed Chair Powell did a Q&A with the Wall Street Journal yesterday, and he said, basically, he reiterated the Fed stance that they're not worried about inflation. The Fed, remember, has to balance employment with keeping prices in line. And that led to a sell-off in bonds, which means higher rates. Higher rates, because rates move in the opposite direction of bonds. So higher rates, first of all, makes it more expensive to invest in the economy, but it also means a stronger dollar. Stronger dollar means higher. It means it's cheaper to buy Bitcoin. You need fewer dollars to buy Bitcoin, and it's more expensive to borrow to buy Bitcoin. But from the Fed's point of view, remember that 2% inflation, they still have that target, and that hasn't changed. What the difference is this: they're willing to tolerate higher inflation if there's a period of time before or after where there's lower inflation. The 2% target is an overall long period target. That hasn't changed. But the market is worried that the Fed can't control it. And of course, this morning when they had the high jobs number, they're worried, oh boy, the economy is going to pick up again. The Fed won't be able to control it. But then that means more inflation. Guess what? More inflation is strong for Bitcoin. So that's why we saw a rebound, perhaps, in Bitcoin right after that sell-off this morning.
All right. So Bitcoin may be down a bit, but Emily, by contrast, Doge is actually one of the few coins this morning advancing, now trading about 5 cents. It's up about 0.7% over the past 24 hours. Who let the Doge out?
Great question, Christine. So glad you asked. So now that it's Friday, let's just talk about Doge. So Doge, widely considered to be a joke coin, is showing that it has some serious potential. So one of the interesting things that has happened is that Doge is showing some signs of actual adoption. So we just found out that the Dallas Mavericks will be accepting Doge for tickets, and also that you will be able to buy Doge with cash at a network of 1,800 ATMs. So it might not be such a joke after all. People are actually able to use it to buy actual things.
Wow, that's pretty incredible. You can buy some Doge for some Dallas Mavericks tickets. Great. We're seeing mass adoption. All right, well, meanwhile, Fidelity Investments is one of the world's largest financial services providers with more than $7 trillion in client assets under administration. Since 2013, the firm has explored blockchain technology, and in 2018, they launched Fidelity Digital Assets as a standalone business offering enterprise-quality custody and trade execution services for crypto assets to institutional investors. Joining us now is Fidelity Digital Assets Research Director Ria Bhutoria in New York. Welcome, Ria.
Hi, Christine. Hi, Emily. Hi, how are you guys?
Good, good. Glad to have you on the show, Ria. All right, so Fidelity Digital Assets is pro-crypto by design, but in February I saw a note from Fidelity's Director of Global Macro, Duran Timmer, comparing Bitcoin directly to gold. So I wonder, is that bullishness spreading to the rest of the company?
Fidelity Digital Assets launched because Fidelity Investments, as an institution, is positive on Bitcoin and blockchain technology. But until now, most of the research all of the research that we had published to date came out of Fidelity Digital Assets. This was the first time that Urian, who's Director of Global Macro at Fidelity Investments, published a piece on Bitcoin, and it's because he personally went down the rabbit hole himself, and he has an incredible macro background. He has an incredible understanding of markets and historical context, and all of the forces of last year in the economy as a result of COVID kind of led him to do this analysis. So we think that's really positive to get his take and his thoughts on Bitcoin and blockchain.
Right. Well, with Fidelity, they're the original big shot in the custody space among institutions for Bitcoin. I wonder, are you seeing more competition? Is it getting crowded? And where does Fidelity go from here?
Yeah, sure. We are super committed to building an institutional offering for institutional investors. That started with custody. We also offer trade execution services, and we're continuing to explore, what additional services we can offer to provide institutional investors with a truly end-to-end experience in digital assets. But at the same time, we are seeing increased interest from incumbent traditional financial institutions. Institutions like JP Morgan have been publishing a lot of research on digital assets and Bitcoin. There's the potential for Bank of New York to get involved. This week, we found out that Charles Schwab might get involved. E-Trade, all of these companies. I feel like interest in Bitcoin and crypto has gotten to a point where it's positive for more institutions to be involved to kind of facilitate this mainstream adoption among both institutional and retail investors. And we welcome our peers into the space. And from their point of view, the interest has gotten to a point where it wouldn't make sense for them not to consider whether they should get involved in the space. If their clients are asking for it, it makes sense that we're seeing this level of interest from both demand and supply side.
So clearly, this institutional interest has been good for the market. I mean, we're seeing the very tangible results of that. I guess the question is are we sure it can last? And is the Bitcoin market almost becoming too dependent on institutions and on sort of these big corporations buying Bitcoin? And if that were to level off, we could see a pretty sharp correction. I mean, is there any danger in that happening?
From the conversations that we're having and just what we're seeing in the market, we still think it's really early in terms of institutional adoption. All of the public announcements that we've seen over the last year, and especially in the last few months, I think just continue to remove the career and headline risk of other traditional institutions getting involved. So we're just at the tip of the iceberg, in my opinion, and it'll take time. Institutions have a longer period of analysis over which they determine whether they want to make an allocation. And I think different institutions are in different stages of that education process. So I definitely don't think that, I think it's still early in terms of institutional adoption.
And on the other side of the coin, so to speak, do you think Fidelity will start opening up to retail? What do you think is the outlook for something like that?
So Fidelity Digital Assets is, purely focused on the institutional segment right now. It could be something we explore in the future, but right now we're purely focused on institutional.
Good morning, Ria. What's Fidelity's view of DeFi? Is it a threat or an opportunity for things like your custodial business, and why?
We are really excited by what's going on in DeFi. We think that there's significant innovation, and unlike what we saw back in 2017 with a number of projects kind of just putting out white papers, what we're seeing this time around is a real adoption, real metrics that kind of back up the trend of DeFi. And, we're looking at it, we're learning about it, and trying to figure out, whether it makes sense for us to get involved. Of course, we have Fidelity Center for Applied Technology, which does research and kind of projects to determine whether it makes sense for us to get involved in any kind of way. But we're definitely looking at the trend and are excited about it and its potential.
Ria, I'm wondering if you're recommending that more corporations buy BTC. We see Tesla, we see MicroStrategy, Square making investments, but are they a fringe movement, or do you see a larger corporate move into buying up BTC?
So we don't make any recommendations, but I do think that the announcements by these companies have motivated other corporates to at least take a look at and figure out whether an allocation to Bitcoin makes sense for them. I think in Coinbase's S1, they said that they service a number of Fortune 500 companies as well. So I don't think it's a fringe trend. As you talked about in the beginning, there's more fear or concern about inflation and whether the Fed will be able to control it. What tools do they have at their disposal? And I think corporate treasurers are thinking about inflation in a way that they haven't really had to in a long time. And now they have a tool at their disposal to kind of address it in a way that they didn't have in the past. So I think at the very least, they're exploring it.
Great. Ria, thank you so much. Very interesting stuff on what's happening in Fidelity.
Thank you for having me.
All right, that was Fidelity Digital Assets Research Director, Ria Bhutoria. Coming up, we head over to Bermuda for some BTC and stablecoin market analysis. Welcome back. All right, taking a look at the XBX Bitcoin price right now, trading at 48,245. Bitcoin's down about 2.5% over the past 24 hours. And the ETX Ether price right now, trading at 1496, also down about 4.5% over the past 24 hours. All right, joining us now to discuss the crypto markets is Philippe Bekhazi, CEO of XBTO, an institutional-grade liquidity provider to major trading platforms, and Stablehouse, a stablecoin clearinghouse. Welcome, Philippe.
Great to be here. Thanks for having me.
All right, great to have you. Philippe, we see that Bitcoin is pulling back a bit today. Analysts suggest that if Bitcoin is to resume a rally in the future, more institutions have to onboard. Do you see that on the horizon since you deal with a lot of institution and provide liquidity in the markets?
Well, it's clear that the floodgates have opened. It's been 6 months that has shown relentless sort of buying, very, very short dips, and we've seen some big names coming into the space. They're more sophisticated in the way they buy. They're constantly under the, using, trade weighted average pricing algorithms. So they're constantly buying slowly but surely, and it's providing a support for the market. Now we're trading trading water around 50,000. That's more or less about $1 trillion in market cap. It's grown significantly last year. I think there's going to be a whole lot more to come. It's taking a breather. There's a lot of macro news coming out that is providing some reasons to maybe take some profits here. We believe that the trend is clear. It's not going to reverse anytime soon, at least for for the crypto markets.
Hi, Philippe. When it comes to your over-the-counter platform, are you seeing any flows where are you seeing most of the flows coming from? Is it any particular geography, or is it a type of market participant? What is it exactly that you're seeing, and from where?
It's varied. We see a lot coming from the U.S., but Asia remains strong. There's a little bit of a different sort of cultural approach to Bitcoin. So sometimes the flows are a little reversed, where maybe the U.S. is more bullish and Asia is less bullish. And so you have sometimes, depending on the time zone, some different price action, some sell-offs during the night here in New York on the East Coast or in the U.S. But it's it'll rally during the U.S. hours. So I would say that it's still a mixed bag, but it's still predominantly a bullish environment for sure. I mean, we are in a retracement right now, but it's a healthy retracement. And look, we started. We were in September. I think we were at 12,000. We're sitting around 48 or 49,000. So a tremendous performance so far in the last 6 months.
So there's been so much talk these days about the rise of the central bank digital currency, especially with China, but other countries following suit. And one of the questions that people ask are, is this going to disrupt Bitcoin? Is this going to turn people away from Bitcoin? But it seems to me that the more pertinent question is how it will disrupt the stablecoin market, because it seems there's more similarities between CBDCs and stablecoins. And so the question is there still room for stablecoins in a CBDC world? Like, will they both coexist, or will CBDCs kind of take over that market?
That's a great question. Well, to start with the first question, Bitcoin versus CBDCs, I think people have started understanding what the value proposition behind Bitcoin is. Bitcoin's 10 years old, 12 years old, started out as a currency that was completely separated from the rest of the economy. It's not backed by a sovereign. It's borderless. It's open source. It's divisible out to 8 decimals. It's pretty efficient to send and receive, and so it has, while it has its limitation in terms of its ability to scale. It has become digital, and I think people are realizing this, and this is why you're seeing a lot of purchases of Bitcoin to be put on, balance sheet, corporate balance sheets. You've seen it with Tesla, you've seen it with MicroStrategy and Square, and there will be a whole lot more, I believe. So the difference is very stark. I think people are understanding this. CBDC is simply a digital representation or control by a central bank of its own money supply. The CBDC offers a central bank more view and more sort of flexibility and transparency into what people are doing. There are different kinds of CBDCs. There are none that are actually live currently, so that we can only surmise and sort of predict what different countries will do with their central bank digital currency, if they even will create one. So depending on how they go, which strategy they choose, it could be like very, they'll have a lot of views on the flows down to the retail flow, or less flow and more on the commercial side of things, more between the banks. Either
Philippe,
way,
I understand.
Yes.
I understand that Stablehouse is working with the Bermudian government to develop a testing program for a digital token-based stimulus program. What are the results of this testing program, I wonder?
It's been very good. The testing program has been, what we wanted to do here is to create a program where stimulus money would be tracked, so that the money would be used for specific things on island and not sent, to buy stocks or to buy Amazon stuff. So the idea was to create a token that could be airdropped to people in need. This due to pandemics, on the back of this pandemic, and it could be programmed in a way that you could say, well, no alcohol, no cigarettes, but you can buy groceries, you can buy medical stuff, and whatever makes sense for in that particular scenario. So it's been very successful. We've had some really good feedback. We're still working with the various stakeholders because there are regulators, there's a government, there are merchants. There's a lot of adoption that needs to happen. It's not just a technology rollout. But we're very happy with it, and we're happy that we could make it happen.
Okay, Philippe, very interesting stuff. Thank you so much for your update from Bermuda.
Thank you very much.
Right, that was Philippe Bekhazi, CEO of XBTO and Stablehouse. Coming up, a chat with Valour CEO Diana Biggs and checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day. Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hello there, Nick. Happy Friday.
Hey, good morning. Happy Friday to you.
Good morning. I understand you have an update for us from Ripple and the SEC, new developments there.
Yeah, so Ripple filed its response to the amended SEC complaint last night. A quick timeline. The SEC filed its original complaint at the end of December. Ripple filed its response at the end of January. The SEC then filed an amended complaint last month with a few additional details and some more quotes, I believe, from various reports that Ripple supposedly had access to or saw. So Ripple responded to that last night. And I guess the biggest change to me was it added a couple lines near the end in the filing saying several crypto trading platforms had actually interacted with the SEC about listing XRP, the cryptocurrency at the heart of this particular action. And the exchanges were not told that the SEC was looking at XRP as a security, according to Ripple. So they're now saying that these trading platforms the SEC had an opportunity to tell these trading platforms, hey, we don't think this is not a security, don't list it, and it did not do so.
I mean, putting Ripple aside for a second, doesn't this seem like kind of a larger thing that we hear about a lot, which is like a communication problem between the SEC and basically everyone else?
Yeah, that's definitely been a very common complaint that there's no clear binding guidance that says XYZ is for sure a security and this other thing is not. And Ripple even kind of pointed to that in its filing. That's been a central part of its defense, really. But they referenced a speech by former SEC Director of Corp Finance, Bill Hinman, from 2018, where Hinman said, in my view, Ether does not look like a security. And many entities looked at that and said, okay, well, so if we make things that look like Ether, does that mean it's also not a security? But again, that was never formal guidance. That was never really, that wasn't codified anywhere. So it's still kind of, trying to figure it out as you go along without the security or comfort of that, Bright Lines guidance.
Hey, Nick, what's on the docket for next week? Anything exciting?
That's a good question. I do not believe so. I think the big thing we're looking out for is a confirmation vote on Gary Gensler for SEC chair. The hearing was, of course, this past Tuesday. The Senate right now is looking at the stimulus bills, and I haven't received word on whether or not there will be any votes for Gensler's nomination soon. But the process there would be first the Senate Banking Committee has to pass them out of committee. So that'll be the first thing to look out for. And after that, the entire Senate has to vote to confirm. And my expectation is that this will probably be next week, but as far as I know, there is no formal announcement of that yet.
All right, great. Thank you so much for the update, Nick. Have a great weekend.
Thank you. You too.
That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to check out his State of Crypto newsletter on CoinDesk.com. And our final guest is an early cryptopreneur who heads a Swiss-based investment firm called Valour. Previously, she was the global head of innovation at HSBC's private banking division. Joining us now is Valour CEO Diana Biggs in London. Welcome, Diana.
Hi, welcome. Thank you.
Good to have you on the show. All right,
Nice to be
so
here.
Diana, Valour offers Bitcoin Zero, an exchange-traded product that tracks Bitcoin with zero management fees on the NGM exchange, which operates in Sweden, Finland, Denmark, and Norway, I understand. So who are your clients and what kind of interest is it attracting this product?
Yeah, we're finding these products attract both retail and institutional interest. It's a way for retail and individual investors to easily gain exposure to digital assets and using mainstream investment channels. So they would purchase the product through their bank or broker.
Right. And why buy an ETP for Bitcoin itself?
Why? Because there's a lot of interest in this as a digital asset, as a new investment. People are hearing about it and may not be able to, for whatever reason, purchase it directly through an exchange, a cryptocurrency exchange, and are looking for a way to add some exposure, but to use the channels that they're used to using. So it's really about having other optionality for investors to allow for more accessibility to purchase the product.
So just wanted to talk to you a little bit about a talk you gave in 2017, very influential talk about the potential of blockchain technology. And now we're a few years later. What are, in your view, the best examples or the best use cases of blockchain right now? I mean, what are some really tangible examples of blockchain being used in the world?
I think we're still in the very early stages of finding the use cases for this technology. I think right now we're seeing a lot of really interesting innovation happen in the decentralized finance space. I believe there was a lot of promise for the potential, and we're still really looking at building out some of the core infrastructure that's needed around the space. I think that some of that promise, obviously there was a lot of hype around the space, and then some of it really will come, and we'll see what happens as it built out. That's actually one of the reasons that I, in 2017, took the role with HSBC to look at innovation in financial services more broadly, because it did feel quite early for some of the use cases that we were hopeful for earlier on. Digital identity, humanitarian aid. This doesn't mean that those use cases won't be possible to explore in the future, but for now we have quite a bit of work to do in terms of building out the core technologies themselves, experimenting with those potential use cases and growing them further. But some of them in the financial services industry that we're seeing a lot of potential would be around use cases such as in trade finance and with clearing and settlement. So still very hopeful for the broadening of these use cases as we're moving forward, but I would say it's still quite early days.
Hi, Diana. Are you working on a Bitcoin ETF right now in the United States, or ETP of any sort?
We don't focus on the United States, no. Our focus of our firm. Yes, well, right now I'm just a few weeks into role, and our focus right now is really on the European market.
My understanding is you're in.
Sorry, go ahead.
Oh, sorry, no, go on. Mm-hmm.
I was just going to say, I think there's a lot of interesting potential in many markets, as we've seen with the investor interest that's been attracted through the Canadian ETFs.
My understanding is you're based in Switzerland. Is that correct?
Some of our employees are in Zug in Switzerland. Yes, Valour as a company is Cayman. I'm in London.
Oh, okay. So for just on the Switzerland question for a moment, since you do have employees there, this Switzerland has kind of been widely celebrated as like this crypto regulation heaven. Is that still the case? Is Switzerland a great place for crypto companies to operate?
Yeah, I think Switzerland has been a fantastic environment. The regulator and the government are very supportive of the innovation that's happening in the space, and you'll see there's a really burgeoning and growing ecosystem of blockchain companies and crypto-related companies that are basing themselves there and that have been based there for several years now. And so it's a fantastic ecosystem and a great place to be for those types of companies and looking at these innovations.
Diana, thank you so much for joining us this morning and giving us an update from Europe.
Thanks for having me. Happy Friday.
Friday. Have a great weekend. All right, that was Valour CEO Diana Biggs. Time now to check in with Crypto Twitter with the tweet of the day. And this one is coming from us from wanted by U.S. authorities BitMEX CEO Arthur Hayes saying, "Pumping Iron is my treatise on inflation and why the perfect portfolio is long crypto plus long interest rates. Grab it, drink, and snuggle in for mentally stimulating discussion on the end of the Bretton Woods petrodollar regime." Now, this goes to an 8,000-word essay, TLDR, but briefly, I did see that he had a regimen of about 2 protein shakes a day in college, but really, did anyone read that? Did you read that, Emily?
That seems like a good takeaway from it. No, I did not.
All right.
Yeah, I know.
That does it for First Mover then. Coming up on Monday is special guest quantum economics analyst Jason Dean. Thank you, Emily Parker, our CoinDesk Managing Director of International Content, and Lawrence Lewitton, Managing Editor of Global Capital Markets. I'm your host, Christine Lee. Stay safe, stay healthy, everyone. I'll be back at 3 p.m. live with All That Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.
Thanks.